Hey everyone, and welcome back to episode 2 of Under the Ledger, presented by WLM Accounting. I'm here with Charley, as always, and I'm
Hello,
Alex, and today we're going to talk all about the budget that was delivered last night. Bit of a controversial one, Charley.
mate. I was not expecting a few of those things. I'll tell you what, that was a very nerve-wracking budget, and I can see why a lot of our clients would be stressed about some of the measures that are in there. Now, I definitely think that the government took us by surprise with a couple of those things, but I think it's going to create a lot of work for us and for clients to try and mitigate some of the extra taxes that are going to come out of this and what we can do to kind of help them, especially when a lot of our clients have made business or investment decisions under promises that they thought the government would keep, which unfortunately they haven't kept
Yes, yeah.
those promises.
So before we get into the controversial stuff, so I imagine we'll spend a lot of time on negative gearing and CGT. But let's start
Yeah.
let's get your overall thoughts on the budget. Did you like it?
Look, I was expecting the government to hopefully, start the conversation about a more of a tax system that's focused on not just taxing employment, but more of a consumer-based tax system to make it a bit fairer for people so that middle-class workers and people who are struggling at the moment aren't faced with extra burdens. And I do understand that the government's doing something where they think they're going to tax asset classes for richer people. But I mean, there's a lot of people that, have investment properties that might not be necessarily rich and trying to build a nest egg for their children, or even a share portfolio in their businesses that, small businesses that might see some sort of an impact as well. And I think, it has been a bit unfair for a lot of people, and I think it will have an adverse effect on middle class workers, even though that might not be the
Right.
government's intention.
So thumbs up or thumbs down?
I'd say overall thumbs down. I think the government should have, in my own personal view, should have developed a tax system that is more consumer based, whether it be exports as a whole or, something to do with the GST or something like that. But rather they have, given us a little bit of a carrot with the offsets that they've given us. But I mean, in the grand scheme of things, it's not much. And focusing on trust distributions and negative gearing and other things like that, I don't think are going to mitigate sort of the problems that the government's trying to mitigate.
So obviously a lot to unpack there, but let's start with the good things from the budget.
For me, one of the good things that I think will help some struggling businesses, especially in the building and trades, is the loss carryback provisions. And for those who might not know or might not remember from previous governments, loss carryback is mainly allowing you to claim a current year loss against prior year profits. I think the government did mention something about going back a couple of years, but all in all, I think that was a very good initiative because it does help struggling businesses who would otherwise need to borrow money to fund cash flow to now have another resource there to be able to fund cash flow. One of the things I think businesses need to just keep in mind is that, okay, we've got some refunds back, but there might not be enough franking credits to then pay dividends for future years. And we've just got to really be mindful of that and know that, okay, this is a short-term fix, but it is something that might mean businesses don't have to borrow money for extra cash flow. They'll just get that back as a tax refund for prior year profits. Yeah. So that's one of the good things. And I guess my other little favorite thing is the instant asset write-off. I mean, I've always been an advocate of governments allowing small businesses to match cash flow with their real true expenses. And I think, that we're on the right track to being able to get there with making instant asset write-off a thing, because at least, they spend that money, they get an instant deduction as if it's a normal expense. And I think there should be more incentives like that for small businesses and some medium businesses so that they can take advantage of that and see the, cash flow and the tax deductibility kind of match.
It's good to get some clarity on what the threshold is now, right? I think it's $20,000 forever.
Exactly. Yeah. Every year it's kind of up in the air. It's $1,000, and then all of a sudden the government makes a last minute change and it's back to 20,000, and it goes back to 1,000 and the last minute change. So at least now we've got some certainty about what it's going to be, which I think businesses kind of need that, especially small businesses who, based on our last podcast, we had a chat about struggling environment for small businesses, and the fact that small businesses are more prone to failure in the first few years, this is something that they can definitely benefit from. And I think
Mm.
definitely important.
And I think another thing that was mentioned in the budget was the concession for startup businesses.
Yeah.
Was it? I'm not sure if it
Yeah.
was if there was a limit on it, but they were able to in the first couple of years, if they're in losses, get a tax refund on those losses.
Yeah.
So,
Yeah, that's correct. I mean, the government's still kind of up in the air about apparently consulting with the business industry to see how things are going to work. But yeah, that definitely is something we need to kind of keep an eye and watch out for, and see where we can kind of benefit our clients
yeah, I
with
mean, it will
that.
definitely
Yeah,
help with cash flow. I mean, that's probably like the biggest pain for a startup, right?
exactly. Because the first thing you don't want to worry about is making sure there's enough cash for initial upfront investments, and worrying about how you're going to fund these expenses to push your idea off the ground. So we definitely need that government support to make sure that we can do that. I
Mm.
think that's very important. Yeah.
Okay, so those are the things we liked. I guess
Yeah.
we bite the bullet now and start
We
talking
keep going.
about. So look, let's start with negative gearing.
Yeah. Yeah, negative gearing. I mean, that was, I think, something we were hoping the government wasn't going to introduce, but they've, done a 180 on that and completely switched their minds
Yeah.
on that. And I think it has caused a lot of angst with a lot of people. And I think where the government is coming from, which, I mean, they have some sort of a valid argument there, is that they want to reduce the amount of benefit that people get from investing purely in property and hoarding property and stuff like that. And you relying on taxpayer funding to fund that investment. But I mean, really, is it going to solve the problem? I don't know. In the short term, there is definitely an argument to say that landlords will just jack up rents and put more pressure on households. But I mean, from a tax planning point of view, where I see the issue is a lot of uh, clients of ours have made investment decisions under the promise that they're going to have this concession available, and yes, the potentially grandfathering. But I mean, the government can turn around next budget and say, it's going to apply for everyone. So that kind of is something we need to be mindful of. What do we do with our clients' investments now? Where do they invest if they aren't in property? They've locked themselves into this. They paid high stamp duties. They've done all this sort of stuff. What do we do next? And I think where our role comes into play, and it's very important, is making sure we're able to structure future purchases of property correctly, especially if they're not new builds. The government do have carve-outs for new builds, and to me, that there's a clear reason why they've done that. They want to stimulate the building industry and get that going. But I mean, where do we structure our investments moving forward? I mean, to me, no-brainer is
Right.
companies. Having a company structure, okay, you don't get the 50% discount, but I mean, you're getting a nice concessional tax rate in there.
Well, with the discount gone, which we'll touch on in a bit, but
Exactly.
it's just even more of a
Exactly.
no-brainer now, right?
Yeah, and the thing is with companies is that if you have a long-term strategy to buy and hold, and you've retired and decide to commence your sell down strategy, we can time how the franking credits and the dividends come out of that company, so that you don't have to pay potentially any top-up taxes on that profit. So really, you don't end up out of pocket. And if you're under certain thresholds and your average rate of tax is much less than what the company's paid, you could potentially get refunds back from 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 the government, depending on what your structure is like. I know the government's targeting an average minimum 30% tax, but I mean, depending on how you're structured, if it's a company that's owned by you directly, there could be ways where we could potentially get some of those taxes back as franking credit refunds.
Okay. So,
Yeah.
I mean, we kind of jumped in there about all that, but
Yeah.
we got to point out, look, it is grandfathered, and
Yeah.
I mean, some would say that it was a concession that was probably too generous. I don't know what your view
Yeah.
is on that.
I definitely think it's generous to an extent,
Mm.
but I don't necessarily, see the benefit of just ripping off the band-aid with this sort of stuff without maybe giving some concessions to allowing people to offset these losses against their other investments. I mean, I understand where the government's coming from in terms of certain losses being quarantined, like losses against capital gains or against non-concession, non-commercial losses from businesses if you're a sole trader. But I mean, for me, I think there should be some sort of a concession for people who've earned other investment income and would like to offset it, because I feel like it ends up being like a double tax. You might have a whole bunch of interest income in your account or dividend income that you've earned, where you usually offset your losses on your rental property against that sort of income rather than your salary and wage. So maybe having a bit of a broader approach by the government to say, look, maybe we can offset these deductions against that sort of income to allow us that opportunity to only offset that against the other revenue from investments rather than salary and wage, which they're probably trying to avoid. And obviously, offsetting it against your salary and wage will benefit a higher income earner more than it will a lower income earner. So yeah, that sort of kind of consideration. But I mean, I do see some sort of a merit from the government's point of view. I can see where they're coming from. They're trying to minimize the landlords who like to hoard property and benefit off the taxpayers funding it. But I mean, yeah, kind of giving a bit more of a broader approach from the government to allow you to offset it against other investment revenue might have been a good
Yeah, look,
opportunity,
you
I
have a
think.
point. And I mean, I can see, like, at the end of the day, by allowing negative gearing, the government is essentially helping, in theory, helping these people, have multiple investments.
Exactly. Exactly. Funded by the
Exactly.
taxpayer.
So and I know they said they wouldn't do it, but that's a separate issue. But
Yeah.
look, I think this budget as a whole has been to try and tackle some of these, let's maybe not tax loopholes, but tax
Yeah.
strategies that people have been utilizing. Look, and like you said, whether it'll actually be effective in achieving what they're trying to do,
Yeah.
well, it's up for
Yeah.
debate. I know, like, economists are sitting on either end. Depends who you ask, and I guess only time will tell, right?
Yeah.
Right.
Yeah. And I think, look, if you're a client and you're looking for advice, it's important to consider your options if you want to invest in property and you're not phased by the negative gearing. Obviously, if you invest in property in real estate, residential real estate in Sydney or Melbourne or wherever the hotspots are, you're looking for capital growth. Your hands are tied now with the capital gains tax concessions being removed and negative gearing being removed for any future properties being purchased. But you should look at structuring. Structuring is the key, and structuring is what a good accountant should be able to help advise you on. Okay, a family trust might not be the best structure, and we'll obviously touch on a couple of things that have come out of there, but obviously it might not be the best structure for things like land tax concessions as well, depending on what state you're in. So you might need a company. You might want to buy an SMSF. So it's important not to be detracted just because this is gone, but to look at other ways you can invest in property and how we can kind of help you structure these investments in a way that will give you another advantage in another way. Okay, you've lost the 50% discount, but can we get you a lower corporate tax rate, for example? So there are definitely ways we can structure you if you want to keep investing in property. It's just, okay, we've lost this concession, but we should look at what we can do next. And I think that's very important from our point of view.
Definitely.
Yeah.
All right. Should we move on to the next one, which is CGT?
CGT, good old CGT. What's funny, we were having a chat in the morning and I was adamant it was just on property. And I was like, surely the government won't do it on everything. I understand where they're coming from with property. I mean, they want to make sure that people aren't hoarding property. There's enough supply in the absence of, builders being encouraged to build because of low profit margins. Okay, the government wants to make sure there's enough property going around in the market to allow first home buyers to buy. But I mean, they even got rid of shares, ETFs, and all sorts of investments. And I think if you look at the comparable taxes around the world, I mean, we are one of the highest tax investment, countries for investments in the world. And I think it just detracts from people wanting to invest in our country. So I understand the merit of doing it for property. I just think we should not have given, should not have extended that penalty to shares and other investments. I was reading a couple of comments from a couple of people who are millennials trying to buy their first home. They're just, about to get married, or who are married and have a home and are saving up a nest egg for their kids, who have a share portfolio. And, the argument is, okay, I'm not investing in property. I don't want to buy extra property. That's fine. I want to invest in shares or something else in the market that will allow me some growth to build a, say, education fund for my kids, or help me pay down my mortgage a bit quicker or something like that. Why is the government targeting me? And that's a very good question. And I think the government potentially, from my point of view, has made a mistake by extending the capital gains tax, removal of the capital gains tax discount to shares and other sorts of investments. So I think, again, structuring is key. We've lost this loophole, but is there any other vehicles we can invest in? Is there any other ways we can mitigate the pain for younger families who want to invest in shares and have a nice nest egg for their young family? What can we do to fix that? But yeah, I think the government got it
Yeah,
wrong
I
there.
mean, I guess to that point, not that I'm advocating for the government here, but I think their objective is not just housing prices. Like, I think that was listed as one, but I think affordability in general. And I guess by capturing all the assets under this, they're able to generate more revenue, and hopefully they can fund whatever benefits, whether it's through tax or through other means.
Yeah,
Uh, I think that's where this is going. Another thing that's important to note is that this change is not grandfathered. It's only partially grandfathered, right? So
correct.
I think you got till 30 June 27, where if you currently hold an asset or you buy one before then, I might be wrong on that one, but up until 30 June 27, that discount is still available. And then we're not actually sure what the mechanism will be, but it's some sort of, whether it's a market valuation or something on that day. We basically say all gains up to that day are entitled to a full discount. And then after that, we start doing indexation. So indexation is back.
Yep.
I mean, so we had that. I mean, I've never come across indexation. Maybe I'm too young for that. But yeah, I think it was in the 90s. That was what it was.
Yeah,
So from what I understand, that is important because companies do benefit from indexation, but they didn't benefit from the discount, right? Right.
correct. Yeah. So indexation basically tries to spruce up your cost base to match inflation. Government's initial idea is you get a market valuation, you get a reset cost base, and then as you progress, you get to index your cost base in line with inflation. But the problem, I guess, I see with that is that, okay, it allows you to spruce up your cost base to match the pace of inflation. But unfortunately, things like property in the hotspots are increasing sometimes double the pace of inflation. So you're always going to end up making a larger than expected gain. You're never going to kind of break even, and you're always going to have that tax burden
Yeah.
to pay. I mean, the discount is always the best option to go, but in lieu of that, the increasing of the cost base is okay. It's just not ideal and not equivalent to what we were getting now. So it is going to be a bit of pain for people who want to sell assets. And I guess, like you touched on, Alex, we've got till 30 June next year to do it. So we've got around 12 or 13 months to effectively plan. Okay, what do we do? Do we restructure now? Put it in a better tax, environment, or do we sell? Do we get rid of the property?
Yeah.
I think now is the time you've got to talk to your accountant and you've got to work out, what do we do? How do we fix this problem? Is this something we've been itching to sell and now this is the incentive to sell? Or should we restructure? Are we looking at what impact, if we want to keep this long term, are we looking at what impact it's going to have on our kids in the will, for example? Is it, we're going to create an unnecessary tax burden for them? These are the sorts of things we've got to sit down with our advisors and talk about with, because we need to know how to effectively plan for these. I mean, luckily the government's given us a bit of breathing space, but who knows what happens in the next 12 months. The next budget might come around and they might be even more restrictive about tax on investments. We just don't know what's going to
Yeah, well, we
happen
don't
in
know what
12
they've left
months.
on the
So
table, right? You know,
exactly,
because I
exactly.
forget how long it was now, but when they were going for franking credits, think that was the Bill Shorten. You know,
Yeah.
are they going to try again?
Yeah.
Plenty of things for them
I
to
know. And
unpack.
and yeah, for those who don't know what franking credits are, and unfortunately, look, we've got a lot of smart business owners who are very good at what they do, but they laugh at me when I mention the word franking credits. And really, the benefit of franking credits is that it makes sure that you're not double taxed on the profits made by the company. Because what happens is if the company makes $100,000 and pays $25,000 in tax, and you pull out the remaining amount as income, the idea is you don't get double taxed. You get a credit for what the company's already paid, and you pay the difference between your marginal rate and what the company's already paid. So yeah, it is very important that we don't lose those franking credits, because what it means is we end up getting double taxed. And that's kind of what we hope that doesn't happen. And that's, you're right, that's still up in the air. We don't know where that's going to head and what we can do to mitigate that. There are probably some
We
things
don't
we
know
can do,
until,
but
yeah,
yeah,
that's something you have to tackle as it comes.
yeah,
But
we've got to
yeah,
keep gauging it.
mm,
I wouldn't put it past the Labor government, to be honest with you. I know they love doing these, U-boot things that keep accountants busy and happy, but obviously to the detriment of a lot of our clients,
Sure.
which is
yeah. Well,
unfortunate.
I mean, we can already see a lot of restructuring work coming up.
Correct. I think, Alex, the biggest thing as well is I am all for the government doing these sorts of reforms if it can be proven that people in the building and trades can get back to making profits on build, because once we know that they can make profits, they will have the incentive to keep building. And I think if we can somehow ensure that the costs to them come down, then they'll have that incentive to build. Then we won't have to rely on such a harsh tax system to allow there to be supply in the market. We focus on how can we motivate these builders and these traders to be able to build, make a profit, and keep going. If we're creating things that might impact them and their investments that they've got that might be in conjunction with their businesses, and all of a sudden they've got extra taxes, then well, that's another burden for them. Do they really want to keep supplying if they're just having extra burdens of taxes?
But do
So
we not think that the government is, well, I don't know if they're achieving it, but I mean, by keeping these concessions for new builds,
yeah,
um,
yeah.
do not think that they're achieving?
I I hope so. I honestly hope so.
Yeah.
Yeah, I think the problem is it's all, whatever the government does, it's always a wait and see approach. And the thing is, you don't know what you don't know. The government, the funny thing is, I was watching this thing last night after the budget that showed where the government thinks things will get to in terms of employment, new builds, etc.,
Yeah.
and then where the RBA thinks it's going to be. And there's always such a disparity, and you kind of worry, is the government actually telling us what we want to hear, or is it telling us what is actually going to happen? And that's kind of where the worrying thing is. So I think, to answer your question, it's just a wait and see approach. We just don't know right now, and I think we won't know until probably this time next year when the next budget comes out and the next figures
Yeah.
come out. So yeah, but I think all in all, I understand where the government's coming from. I just think there could have been potentially a bit more thought put into the negative gearing and how we could kind of, not fully just axe it, but maybe apply it to certain types of
Yeah.
income
I
only.
mean, with the CGT, the fact that it's not fully grandfathered, I
Yeah,
thought was really, really
yeah,
controversial.
yeah,
It's going to make
yeah,
things complicated. That's for sure.
yeah. Well, the fact that they brought into play the pre-CGT assets as well. I mean, I suspect personally there probably won't be a lot of clients that still have them. I know I've noticed a lot of clients who 10 years ago in the firm have had those, which have now, whether they've
Been
passed
reset.
away
Yeah,
and
been reset.
been reset, or have sold down because of business circumstances, etc., etc. So I don't really see that many anymore. So I suspect the government has made it all inclusive because there probably isn't that many people impacted by it. But I mean, yeah, it is
I mean, it's
still,
still very
yeah,
controversial to just go ahead and ungrandfather
I
them.
know, I know, I know,
Yeah.
I
If
know.
there
It
aren't that
is,
many,
yeah,
then why not leave them?
I know,
But
I know.
anyways, okay. So I guess the last point was about trusts, and I think
A fun point,
this
yeah,
one came a bit, it caught a lot of people off guard. Not like
yeah.
in the media lately, it's been mostly about negative gearing and CGT. So
And we've had some friendly debates about where we think it's going to land. I think from what we can see, it's pretty clear where a individual beneficiary will land. And we understand that the government is trying to impose at least a 30% tax rate on trust distributions. I mean, if you're earning more than $45,000, it's probably a moot point. But if you have children who genuinely benefit from your family trust, receiving trust distributions, and it could be for funding education expenses or, day-to-day discretionary expenses, they're the ones that will get hit. So it is an extra burden for family groups. But yeah, I do think that in that situation, it is going to be a bit harsh. But where I kind of don't have 100% certainty is if you're using a corporate beneficiary to reinvest your funds, what will happen there? I think that's still a bit up in the air. I understand the government said they want to consult with small businesses and get a bit more of an understanding of how to fully formalize that, how to formulate the final approach on that.
Mm.
But yeah, I think it's important that the government is very transparent on what they're going to do there, because the problem is, I understand they don't want people to recycle their distributions through a company to benefit from the franking credits. But what is going to happen with companies? Are they going to get double taxed on profits? Are we paying one tax at the trust level, then again at the company level? If so, what do we do? How do we restructure? We need some proper guidance from the government, which I know will come in the next, few days or few weeks. But I do think that the government needs to really think this one carefully, because a lot of small businesses rely on these structures, not just to get out of tax, but for income splitting between family groups where people are struggling, small business owners are struggling, or they're trying to provide for their children. It's a vehicle for wealth for middle families, not just large families. A lot of small or medium-sized businesses have these types of structures with trusts.
Yeah.
And
What
so
do
I
you
think it's, yeah.
what do
And
you
so I
think is
think
going to
it's,
happen now?
yeah.
I mean, so they basically attack the trusts.
I think trusts are potentially dead. Without the capital gains tax concessions and without the benefits of negative gearing, or these extra taxes on trust distributions, I think people might move away from trusts and they might move to things like company structures. I understand that there's the Bendel case still up in the air, and for those who don't know much about it, taxpayer trust distributes the company. Funds, for one reason or another, don't necessarily go to the company. Is that a loan? Taxpayer argues no. ATO potentially might lose that case. And so I think this has come in to kind of eradicate that problem, because again, like I said, some of the smaller or medium-sized clients are using it for, investment vehicles for their small families, for things like education portfolios or discretionary expenses, putting their kids through school, funding their education, funding their, sporting activities, all that sort of stuff. This is what these sorts of vehicles are used for small and medium businesses, not just dodging tax. And I know that a while back, a couple of the independents and even, One Nation was talking about income splitting. Well, some small and medium businesses use this as a form of income splitting. One family might be on $120,000 sole breadwinner and pays a tax at their marginal rate. Another family might, earn that income through a trust, through their small business, and be able to split it 50-50 with husband and wife.
Yeah.
And I understand there's a bit of a disparity there, but rather than addressing the problem with the salary and wage earner and having that sort of income split with them, what the government's decided to do is, no, we'll keep taxing this single breadwinner as it is, but rather than bringing them down to this level, we'll bring these people up to that level, so that now everyone's paying a much higher corporate rate of tax. So I think, okay, trust distributions are trying to attack it, but why not do it in a way where you can not punish the middle income earners who have trusts because they've got small businesses, but rather keep the status quo with these sorts of clients and find ways for salary and wage earners to split their income with their spouse. So, there's a whole bunch of things that the government can look at doing. And I think it's just a blanket 30% tax. We're punishing you if you have a family trust. It just doesn't, to me, make logical sense. It doesn't make sense for small business owners who rely on these sorts of structures for cash flow or for investment for the young kids. And also, I think it's just the whole thing about a flat 30% for capital gains and trust. It's just a detraction for people to even want to invest in Australia. It just makes you not want to invest. And I understand that the government doesn't want that for properties, but sometimes some investment is good if it's done in the right areas for our country.
So family trust gone. We'll say even bucket company is probably gone.
Yeah.
Since we're not going to have the
Yeah.
trust to distribute to it.
Yeah.
And we just have the investment company now.
Yeah. It's looking like investment companies might be the best way to go. Again, some of the information provided by the government is still a bit preliminary, but if you've got a company that is owned by a family trust in your small business, you might decide, look, let's have an investment company in there. And that investment company might either be owned by a trust or might have different classes of shares depending on how big your business is. And, depending on whether or not we don't impede any other concessions you might get, we might have other ways we can restructure you to give you a similar sort of a benefit.
Yeah.
The government has closed a couple of loopholes by imposing a minimum 30% tax, but the idea is we don't want to get double taxed. And by that, I mean, if we use a bucket company and the government decides, no, we're going to double tax that by charging a separate company income tax on trust distributions, well, how do we restructure you so that you're not feeling that burden with that extra tax? We might say, okay, get rid of the family trust as the holder of the trading company shares and put an investment company there in its place.
Yeah.
Have that owned by a family trust, or even have that with separate classes of shares. I mean, there's a whole bunch of things we can kind of look at to restructure. And that's why, again, there's going to be some sort of a time frame that the government's given us of around 12 or 13 months. We should use that really to talk to our accountant and understand what can we do to restructure to assist us with this. And the government is going to be releasing some sort of rollover relief as well. So we can see, I guess, watch that
Yeah, what
space
the
when
eligibility requirements are and that. We don't know. No small business.
Yeah, exactly.
I mean, is it just a normal test? Yeah, I guess we'll find out because
there's
already a rollover relief for small businesses. So I'm not sure how different this one's going to be.
Where it comes exactly. Exactly. But yeah, it's definitely was a fun budget, at least fun for accountants who have all this extra work now that we've got to deal with. And the Labor Party loves to give us all this extra work.
Yeah. Debatable. It's really, you could say it's a really good time to be an accountant. You never had so much work, but I don't know if you're just the everyday taxpayer who has a business, like you've got a lot to deal with in the next year or so. A lot of accounting and legal fees potentially as well.
Yeah, exactly.
So I mean, that's all just thanks to one night at Parliament. Yeah.
Yeah, look, I'm hoping by next budget that I understand the government was a little bit reactive and they're trying to figure out ways to sort out these immediate problems. But I'm hoping by next budget we can have more of a broader tax system that allows the government to collect their revenue, not just from income taxes, but more of a consumption-based system where we pay tax as we consume. Obviously, there might be a bit of impact on lower income earners, but I'm hoping the government will have subsidies for that. And then in lieu of the extra taxes from the broader consumption-based system, we can look at potentially reducing the burden on middle taxpayers who are really funding the tax system at the moment. And I think taking that burden off them will probably alleviate some of the crisis that people are facing with inflation or with housing market. And I think in lieu of that right now, I think it's important, again, I reiterate that we talk to our accountant if we've got investments or a small business and understand the impacts of these changes and how we can potentially restructure to mitigate any sort of adverse outcomes, especially if we're using, corporate bucket companies as repositories for funds and using those for rainy day savings. What does that mean in terms of any future trust distributions going in there? If we've got trusts that hold properties that miss out on the capital gains tax concession now, we'll have to pay the corporate trust rate. What do we do? How do we kind of restructure to fix that problem? I think now's the best time to get some advice and sort it out, because it's a problem that's going to be, here for decades, potentially.
I think it is important to point out that none of this is actually law yet, and we don't have the full details on everything.
Yeah.
So, we're going to we're going to learn more as we go. And
Exactly. Hopefully, we'll have another podcast once the government, formulates their
keep
thoughts.
people updated.
Exactly.
Okay,
Yeah.
well, it's been a pleasure as always.
Yeah.
Um,
No,
been
it's
a good
been good,
chat.
Alex. Yeah.
Lots, very controversial, lots to talk about. But I think if you've got nothing else, I think we need to cut it here.
Yeah, I think that's it. All I have to say is the government did issue a $250 rebate for people that we didn't really talk about. So I hope you enjoy your 68 cents a day, Alex, and I hope you spend it well.
I'm going to save it up and then I'll buy lunch one.
Yeah. Yeah. Exactly.
Awesome.
Exactly.
Okay. Well, thank you everyone for staying to the
Thank
end,
you.
and we'll see you next time.